Awesome. So hi everybody, my name is Jessica Rorson and I'm working with the IBDS program in partnership with Sage Hill Community Futures. And today we have Trevor King with us and he is going to be talking about business write-offs and expenses for your income tax. This series, we pegged it as the Biz Maker series, and we've been offering free webinars since June, tailored to entrepreneurs, startups, growing your business. Obviously, due to COVID, we haven't been able to get together, so this was a way to offer some training to entrepreneurs, and we've had a real host of different topics from marketing, creating photos. Oh goodness, I've totally lost my train of thought here, but so many different topics that we've had, and we have a YouTube channel where we have majority of them living. And this one also is going to be recorded, and I can share the link after, and then you'll be able to find all the other resources that we have had, that we have on the site. So I'm going to pass it over to Sherilyn.
Hi, I'm Sherilyn, and I'm the consultant for the Indigenous Business Development Services. And so we work with Indigenous people throughout the province that are looking at starting businesses, need to learn more, just need to network, whatever it is. Whatever it is they need, then we try and help them make sure that they get what they need. And I'm also in partnership with Sage Hill Community Futures Development Corporation.
Hi, and I'm Jenny Glissman, and I'm with the Sage Hill Community Futures Office. We work with the IBDS, and between the two of us, we bring these to entrepreneurs all across, basically across the province, and especially to the Sage Hill region as well. So with that, we're excited to have everybody here today. I'm going to turn it over to Trevor, and he's going to lead us through all this exciting tax stuff.
Yes. Hi, my name is Trevor King. I'm one of the managing partners at Prairie Padgett here in Rostern. So what we're going to go through today, I'm going to try and make this not a dull subject, because I'm sure when most people think about deductions and income tax, it is a dull and dry subject, right?
That's right.
For most people. Okay. I guess I'll phrase it to you this way. Who likes money? Everybody likes money. Who wants to keep more of their money? And that's exactly what we're going to go through here. Honestly, when I started out with this, the thought of doing taxes made my skin crawl. It's just like, it's dry and it's tedious, and why do I need to know all of these things? And then you realize some of the deductions that you're entitled to and what the rules actually are pertaining. Oh, we have someone else joining us.
Yep, I've got them in. So yeah, we'll just continue. There'll be a few more probably joining as we go.
All right. So, fun facts about money, specifically US money. Did you know that US paper money is not actually paper?
I heard somewhere that it was made out of cotton.
It is. It is 75% cotton and 25% linen.
Wow.
So, fun facts. I got all kinds of fun facts for today. Like, did you know Al Capone was actually brought down from tax evasion?
No.
That's how they caught him. He was cheating on his taxes.
Well, there you go.
Exactly. The more you know. So what I'm going to do is I'm going to bring up, I have a PowerPoint presentation that I'm going to go through. We're going to ask some questions back and forth. And I really want, we have the chat open. If you guys want to type me a question or something you're not sure of, you can just interrupt me and ask. If it's something that's quick, I can answer it right away. If not, we'll move it to the end and we'll have a question and answer period. Does it sound good?
Sounds good.
Perfect.
All right. Now, I'm going to share my screen with you. Okay, can everybody see this?
Yes.
Yep.
Yes. Yep.
Okay. So this is all the stuff we're going to cover. We'll do some introductions. I'm going to talk about business setup and the different types, what specifically how your business is set up, whether it's a sole proprietorship or a corporation. We'll play, is it deductible, service versus resale, what is a capital cost or expense, business expenses, and home office, vehicle, common errors, contractor or employee, record keeping, and then professional help at the end. All right. So, like I said, I'm one of the managing partners with Prairie Padgett Tax and Accounting here in Rostern. I do tax preparation, business plans. I'm a QuickBooks Pro advisor. So one question, can I get one question from every one of the business owners as to what you really want to get out of this webinar? What can I help you with specifically?
I want more deductions for tax purposes.
More deductions. Okay.
I would like to know, what is a deductible? Like, how far can we go with what can be deducted from taxes?
Okay. Good questions. All good questions, and I'll definitely cover all of those. Any more? I get one more question.
One of mine would be mileage. So not having, there's like kind of the, what is it called? There's like a general formula you can use to claim mileage versus actually tracking. I don't know. I've done a really poor job of tracking the kilometers. However, I know the dates and the kilometers that I've traveled.
Okay.
So kind of like just clarifying that whole car piece.
Yes. So the vehicle deduction is one thing that CRA can look very closely at. And it can become kind of a headache. But just some simple things just to simplify it for you, and some simple things you can do to keep track of.
I think
stuff.
there's like a standard mileage rate that you can claim.
Yes, there is a standard mileage rate.
Yeah.
Yeah. Okay, perfect. I'm gonna move on. Let's play fact or fiction.
Sorry, I couldn't get off mute. I'd like to know about like just GST and PST stuff.
Oh yes. So GST and PST is kind of its own webinar all in itself. I think I'm
is hosting in 2 weeks.
2 weeks.
2 weeks.
2 weeks. We are going to completely write GST and PST for the whole hour.
Yeah.
Yeah, it's gonna take an hour because that is a common problem I find with some of my clients is, well, I charged the GST and the PST, but I didn't remit it, and what do I do now? Well, now you give the government their money because it's not yours, the GST and PST, it's theirs. So that's something we have to cover all in itself. It is, yeah, it is complicated, but we'll definitely do that on the 18th. So if you hire an accountant to complete your tax return and they make a mistake, the accountant is liable because they made the mistake, right?
Nope.
No.
Nope. Can I get a consensus? You guys think
I would
yes
say
or no?
I
You
would say no.
Oh, man. Guys were obviously paying attention. That is fiction, because it is the responsibility of the taxpayer to ensure that their return is filed correctly. So CRA is not going to go after whoever filed your return. They're going to go after the taxpayer. And that is a very, very common thing that I find is when I get new clients, they say, well, I filed 3 years ago and then I didn't file for a couple of years because I thought my accountant was doing it, and they didn't do it, and I didn't check on them, and I thought that, oops, sorry, put that on mute. I thought that they were remitting all this stuff on my behalf, and they didn't. The CRA doesn't care. They're after the taxpayer because they're the one ultimately responsible. So with that being said, when you get your tax return back, or if you file it yourself, obviously you're 100% responsible. When you get it back from whoever does yours, you have to go through it and you have to check, and you need to be thorough. It's a big part of your business in the sense that that's what determines how much you pay or how much you get back. right? Moving on. I just need to move this out of the way. So, from what I've seen, everyone seems to be in the service industry, right? We don't have people that run any kind of retail setups, retail stores. No, okay. So because there are some deductions that pertain to resale or businesses that manufacture stuff, for example, like apparel or anything like that. But if you're just in the service industry, that's good. We can kind of tailor this webinar to focus in on that. Is anyone here incorporated?
I am.
You're incorporated?
Yep.
Okay. So the different business classes we have, you'll either be in a sole proprietorship, a partnership, or a corporation. Now, sole proprietorships, for my clients, they come to me and say, you know, I'm going to start a business. My first advice is just run it as a sole proprietorship unless you have a huge liability exposure. It's cheaper, it's easier to get up and off the ground, and you can write off losses against your personal income, right? Because most people don't just quit their job and start a business. They usually start as a side hustle, and then it grows, and then they leave their employment. Or there are people that just up and quit their job and start their business and kind of give it all she's got to get it off the ground. Partnerships, you don't need a formal partnership agreement, technically. I definitely advise getting one if you're going into business with someone else, especially if it's family, just because that can make for hurt feelings in the long run. Corporations. Now, do you mind if I ask if you incorporated for liability or for dividends?
Liability.
Yeah, see, that's a big one. Is it gives you a corporation is basically like setting up another person, right? So the company exists all by itself. It's responsible for its own liabilities. It can borrow money. It can enter into contracts. The two main reasons for incorporating are for liability purposes, if you have a high chance of being sued, or for income distribution. If you don't need all the business income to live off of, leave it in the corporation, it's subject to a preferential tax rate. So for the purpose of today, I'm going to focus on the sole proprietorships in the service business industry, because that seems to be what everyone is geared towards, right? I can, if someone has some specific corporation questions, I can answer them. Or if you're like, oh, should I incorporate my business? That's tough to answer through a webinar. That's more of a email and phone call conversation to have. All right. So, move that over there. Perfect. All right. So, capital cost. Capital cost is something that's going to come up when you're talking about deductions. So, for example, if you were to go out and buy a new vehicle for your business, can you write off 100% of the cost?
No.
No, not at all. It's capital cost is a piece of equipment that's used for more than 1 year or one business cycle as defined by the CRA. So capital cost items would be any equipment, vehicles, buildings. They go into what's called a CCA table. So you depreciate them over time and you write that expense off against your income. Even though if you buy something with cash, say for example, you go out and buy a piece of equipment and it costs $10,000, you don't get a $10,000 deduction that year. You have to write it off over the life of the equipment. And the CRA has set categories as well as rates as to what is deducted over time. Those are carried forward year after year. So when you're talking about what to keep as far as is it a capital cost versus an expense? If you're going to use it for more than a year, it's a capital cost and needs to go into a capital cost table. You can include with that all the costs to set up the piece of equipment. So for example, Sydney, you do aesthetics, and you would have a table.
Yep.
Right. So your table would be considered a capital cost.
Right.
That's something that would be depreciated over.
Okay.
Over equipment. I think it would be 7 years on a depreciating schedule.
And where do you find this information?
So your CCA tables are available from the Canada Revenue Agency.
Okay.
You can just search their site and just search CCA table, and it'll give you the different types of classes.
Okay.
Vehicles, equipment, buildings, buildings acquired in different years.
Okay.
The only capital item that isn't in a capital cost is actually the purchase of land. Land is not considered a capital cost. It doesn't depreciate.
Sydney, probably also if you just Googled capital cost allowance table, it'll come up.
Okay.
Because searching on CRA's website will be a pain in the butt.
That's brutal. Yep. Okay.
Yeah. Yeah, your capital cost tables are available online. I always refer to the CRA website because I don't want to send someone down a rabbit hole and give them the wrong information.
Fair.
So yes, delivery, setup. So if you paid someone to deliver your table and set it up for you, that's all included in the capital cost of that piece of equipment. Okay. Do you have any questions regarding capital cost allowance?
Is it in the first year you can only claim half of the eligible amount? Isn't that right?
It depends when you purchase the piece of equipment. Most of them are subject to the half-year rule, but if you bought it January 1st, it's a whole year, right?
Sure.
So by that standard, is it better to buy equipment later in the year or at the beginning of the year?
It depends when you're, well, for a sole proprietor, really you buy the equipment as you need it based on your business. I mean, if you're coming to the end of the year and it's like, oh, I need to spend some money or I'm going to have to pay some taxes, that's why you do a mid-year checkup, right? Go through your books and be like, oh, I have all this extra revenue, you know, if we need to replace a piece of equipment, let's do it now before the end of the year. Because big capital expenses that are made in December are going to be looked at pretty closely. All right. Anyone else have a capital cost question? No? Okay. I'm going to keep moving on here. Right. So business expenses. Now this is where the CRA leaves stuff open to interpretation. They're written in a way where you have to look at it as like, okay, is this legitimate, non-legitimate? So what is a business expense? CRA definition of a business expense is any reasonable current expense you paid or have to pay in order to earn business income. All right. So what exactly is a business expense? That is a very loaded question. Basically, if it costs you money to build your business, grow your business, buy your business, and you have a reasonable expectation of making a profit or even earning income, that is considered a business expense, right? So if I spent, say I hired someone to do some research for me. I want you to determine the viability of me putting up a 4-story office building in Rostern. And I spent $5,000 and it turns out that's a terrible idea. Don't do that. That would be considered a business expense for me.
Do you have to have a business license to claim expenses?
No.
No, you don't.
Okay.
Like, do you mean, like, do you have to be
No, like in
licensed?
your
in
example, to pay somebody to do the research before you even started that business. Like, if you could claim that as a business expense, but you don't have, say, the license for that business because you found it was not viable, you could still claim that money.
Yes. So
Okay.
for my example is I'm using my existing business I have, right? We have an office building here in Rostern, but say we wanted to spend the money to buy a new one or build a new one, that would be a reasonable expense. But you're talking like, do you need a business license, as in, do you need to register a business name and set all that kind of stuff up first?
Yeah.
No, because you can operate as a sole proprietor, right? Just under your name. Like you can,
Right.
you don't need to register your business name with ISC or anything. And that's another thing we could have touched on when we went through types of businesses. So no, you don't need to register a business name.
Okay.
I recommend it. I also recommend keeping separate accounts with, even if it's a sole proprietorship. It's just cleaner that way. So I don't know. Can you guys see all the videos along the bottom of the screen, or can you see my PowerPoint clearly?
See your PowerPoint.
Point. Yeah.
Okay. So if you have a business meal, is it 100% deductible?
Nope.
Anyone else?
I have absolutely no idea.
No idea. If I take Jessica out for coffee, or we have a business meal, say Jessica and I have a business meal and we discuss the next section of the webinar we're having, and my company picks up the tab, is that a business expense?
Yes.
Kind of.
Not 100%.
There you go. That's the correct answer. Right? It's one of those questions. It's kind of yes, and it's kind of no. It is deductible, but only 50%.
Okay.
Oh, my goodness. I skipped all the way forward here. My apologies. There we go. So yes, meals and entertainment are only 50%. So if you are, say, a commission-based salesman and you take clients out, only half of that expense is considered deductible, right? If you incur, say you're on your way to a business meeting and you stop for coffee, only half of that is deductible. Right? Some of your really common business expenses that lots of people miss. If you spend money on advertising, I think we've all, as business owners in the last year, we've all felt the effects of COVID. So we've turned to social media to increase our advertising and increase our exposure. There are paid ads, and those are 100% deductible.
So on this list, everything would be 100% deductible aside from the meals and entertainment?
Yes.
Okay.
Yes, and I'm going to, meals and entertainment we touched on, that is only 50%. Bad debts. If I said to you, you can write off bad debts, what do you think I mean there?
If I did work for you and you didn't pay me.
That is true. So if you have a client you just can't collect on, and you don't have a reasonable expectation of being able to collect on them, you write them off as a bad debt. Now, there is a caveat to that. So say you have a client, Dawn, say you provided some life coaching to me and I took your services, used them, and then, I just didn't pay. Just decided, I'm not going to pay you. You write it off as a bad debt, right? Claim your deduction. And I come back to you the next year and I say, Dawn, I just can't function without you. Here's the money I owe you, and I'm going to prepay you for our next session. Now what do? You need to go back and actually reverse your bad debt and claim it as income.
On your upcoming tax?
Yes. So you can write off bad debts if you feel they're uncollectible, but it can come back. So you need to be fairly certain you're not going to be able to collect on it. Right?
What if it's like $100? Does CRA really want you to go back and do that?
Oh, absolutely.
Yeah. Yeah, CRA will only, what does it say on their disclaimer? I think they won't issue a refund or collect if it's less than $1. So
Tell the guy to give you $100 cash and don't do anything about it.
that is not something I ever want to hear a client tell me. Oh.
Don't teach your son that trick.
Yeah.
Yeah, so.
Phil, I just want to, or Trevor, I just want to interrupt for just 1 second because
No,
Phil
it's okay.
joined us. Phil, you have product that you sell, is that correct?
Who?
Yes, there's services and product when we put the machine together.
Okay. Just so that you know we've got a little bit more variety now.
All right, that's
I just
good.
have a question around if you're working from your home, if it's a business, home-based business,
Mhm.
utilities and stuff, you can only write a portion of. Is it based on the size of your office or how much space you're using? Is that right?
That is correct, and I am. That is one of our upcoming things because
Okay, sorry. I jumped ahead.
No, that's
Thanks,
all right.
Jenny, because
That's
that
good.
applies to me.
And that's a big question actually for a lot of people this year is, well, do I just claim the $400 that CRA is offering, or do I figure out how many days I work from home? And it's a lot of math. You know, maybe I just want to take the easy way out, and really it depends on your situation.
As far as meals and entertainment, that's if you're going out and having a business meal. If I'm contracting myself out and I actually have to travel, I understand the travel is 100% covered, but obviously I got to go out and I'm not at home, I'm hours away, or I'm out on the road. Meals then would be 100%, or is that still only 50% for?
Still only 50%. Because the CRA looks at it as you got to eat anyways, right? I know you wouldn't incur the expense like if you were at home, you would just eat at home.
Right.
But yeah, they only allow a 50% deduction.
What about a per diem?
Was my next question.
A per diem, like to cover incidental expenses?
And
No,
meals.
like if we used the Treasury Board rates, and you get so much for breakfast, so much for dinner, so much for supper, and then you have an incidental. I mean, wouldn't they be considered an expense?
The CRA will want actual expenditures. Like they would say, well, we want to see that you actually spent the money for breakfast, right? Because if you're staying away from home and breakfast is included in your hotel, technically you're supposed to use that per diem rate and subtract out the portion that would be for breakfast, and you can only write off 50% of that portion.
Correct. Yep.
According to the letter. Are they going to go that depth into looking at your hotel receipts to determine if you had continental breakfast included in that hotel rate? Pretty unlikely. I mean, unless you really irritated them and they want to go through every shred of your life.
So as a business owner, if you're paying a per diem to your employees while they're out on the road, we can't expense that per diem?
No, expensing a per diem for employees would be included as an employee expense. When I use this meals and entertainment, this is for self-employed individuals.
Okay, gotcha.
Yeah, because the rules change when you go from being a corporate entity to being a sole proprietorship.
Okay.
And honestly, it can get a lot more complicated in a hurry.
Okay.
Insurance, this would be insurance for your business, portion of your house insurance based on your home office. Now, there is within the corporate structure, there is a way to write off life insurance if it's backing a loan, provided the corporation is the beneficiary, but that is a complicated setup. your interest and bank charges, again, associated with your business if you have a line of credit, if you have a separate bank account for your business, which I highly recommend, just so you can keep your business separate from your personal life. Even if you're a sole proprietorship, it's just easier, especially once you add in GST and PST and all those kind of extra government taxes you collect. Office expenses, general. I mean, you buy pens and paper. Those are all expenses. You're not capital costing, reams of paper. Professional fees, if you rent an office. Maintenance and repairs. I mean, it depends on your business structure. And it also depends if you rent an office or if you have equipment you need to repair. Subcontractors. Does anyone have any employees or sub-trades they employ?
Yep.
We do.
You do? Are
We
they
do.
employees or they're subcontractors?
Subcontractors.
Okay, we're going to touch on that because CRA recently has been looking very closely at whether someone is defined as an employee or a subcontractor, because from a business perspective, subcontractors are typically cheaper to pay than having an employee. They're also less of a headache. Salary, that's salary expense for employees, including your deductions, your CPP and your EI. Travel is a legitimate business expense. That being said, you can't load all your kids up in the car and go to Edmonton for the weekend and stay at the West Edmonton Mall and then say, well, I went out there to buy some office supplies. That's pushing the limit of what's allowed. I can see some people are thinking it. I know you're thinking it. Utilities, those are utilities associated with your business. And that would include like your cell phone, because most people don't have home phones anymore, or if they do, they're very few and far between. So from this giant list that I put together here, and this list is by no means comprehensive, I just put it together to kind of go over the big ones that most people maybe aren't sure. Another thing actually recently that's come up is if you're a membership, say you have a golf club membership, is that a legitimate write-off if you use it to meet clients?
I would almost think so.
Mhm.
Or if you take existing clients for a golf game.
Mm-hmm. You're
That would
partially
fall
right.
under- I was going to say that would fall under the 50% then, wouldn't it?
You would indeed, yes. It would be 50% deductible, provided you use it to like meet or entertain clients. You can't just, I have I have an online consulting business, but I write off half of my golf club membership because I go there to meet clients. Well, that's not really legitimate. Right? Yeah, I can see you guys are thinking it. I know you're thinking it. Right. So that's a question you can ask yourself when you're running a business and you're making these purchases. Well, you just have to really think: is this a legitimate business purchase? Is this a personal thing? Is this something I want to write off because I don't want to pay the income tax? Make sure it's a legitimate purchase that you can honestly back up and say, no, that's entirely for my business, right? I meet clients out on the golf course. I take them out. We go for golfing. It's 50% deducted, and you take your write-off. Now, from this list.
Sorry, go ahead. Sorry, I was just going to ask about business fees. So that's really a general thing. So that would be, obviously my business license, but then different things like the name registration and the search costs and all of that. So
your setup fees with ISC, those are all business expenses. And oftentimes I find that, especially new businesses, they spend the money to set it up with ISC, and then they get their bank account, and then they start tracking their expenses. They don't include the couple $100 that they spent to try and set it up.
Yeah.
Right. So from the name search to the registration, even if it's a sole proprietorship, I think it still costs you
It's expensive.
Yeah, it's it's $90 or $100 by the time you're done registering the name and
With the
doing Gazette.
province, I had to pay 55, and then I think again 65. 55 to like reserve the name, and then 65 to make it actually mine. And then I had to pay the city's license, which was another 125.
Yeah, and then you'll have ongoing costs with that name registration, right?
Yeah.
Yeah. So those, again, those are 100% write-offs.
Cool.
And would that include, like, obviously things like, web hosting and
Yeah, domain
all of
names.
that kind of stuff?
Yep.
Yeah, especially
awesome.
recurring, like often with domain names, like especially I know with GoDaddy, you're going to pay a recurring fee every month, or you buy your name for the year, or whatever it happens to be. But yes, yeah, those are all deductible.
And like your QuickBooks that you pay every month.
Oh. Yes, QuickBooks that you pay every month. I mean, sometimes you can get discounted QuickBooks for the first couple months. Usually they run a special, or you find a pro advisor can give it to you cheaper if you just want access to it. Okay. Now, the home office question. This is one that can become very muddled. So basically, your home office, when I work from home, I have an office in the basement, and that's all my business is. All it's used for is that office, right? So whatever that 100 square feet of my 1,000 square foot home, for easy math, if my office is 100 square feet and my house is 1,000 square feet, 10% of all the costs associated with running my house become a business expense.
What if you have a room that you do your business in, but you also have like your office space?
So you mean you have like a treatment room and an office space?
Yeah.
Yeah, those are both.
So just like add them up and go from there?
Yeah.
Okay.
Add them up and go from there. Now, it includes everything except your mortgage cost. Your mortgage cost, like, say I pay $1,000 a month for my mortgage. The mortgage cost itself is not part of the deduction. The interest you pay on it, yes, that's a business expense. Utilities, taxes, repairs, insurance. Say for instance, you replace your front door, and you figure out that 10% is your business write-off. 10% of that front door you just replaced, that's a write-off.
What if you rent?
Now, what
if you rent your house and you don't own it?
Then 10% of your rent becomes a business expense.
Mm-hmm.
Yeah, that's the difference. I've had with clients who go from renting and then they buy a house and they're like, oh, I'm going to write off 10% of my mortgage. No, that's not how that works. You can't do that. Now, this is something that especially new startups get into. They have a lot of expenses in the first year. You have the setup and then marketing, and you don't have a lot of income. Comes to the end of the year and they're like, wow, I'm going to create this huge loss. CRA won't let you use your home office expense to create a loss. So they'll just deny it. Do you guys understand what I mean when I say that?
No.
I think so.
Okay, so say you get to the end of the year and your business has lost money. Like I get to the end and I'm $1,500 in the hole. And I go to figure out my taxes and I find that, oh, my home office deduction should be about $2,500, right? And that it increased my loss to $4,000. The CRA won't let you do that. They won't let you take your income below zero using a home office deduction.
I think that's a really important point. So if you actually made a profit of $1,500, but your home office write-off is $2,500, you can't do that. No, you cannot turn that profit into a loss by using this write-off.
No, you can take it down to zero, and they'll let you do that, but you're not allowed to create a loss using the home office deduction. Like if you have a legitimate loss, like, I set up my business and I spent a bunch of money on marketing and I spent a bunch of money, buying equipment, and the capital cost is way more and my business has a loss, you can carry forward the loss to the next year, right? And they'll let you do that. You can carry forward losses 5 years, and you can carry them back 7. But that is
So
yeah,
in
that's
that
a very-
example, example of the 1,500 profit brought down to 0, there'd be $1,000 left of loss that you could move to the following year, or once you brought it down to 0, you can't move it ahead.
Once you brought it down to 0, and that's specific to the home office deduction.
Oh, okay.
Once you brought it down to 0, it just stays at 0. You can't claim any more than that. But they did that to prevent people from basically abusing the loophole.
Right.
Right? Because you're like, oh, you know, my business has made some money this year, and I'm going to put I'm going to spend $10,000 renovating my house. Well, they won't let you write it off. Not to create a loss, right? But the best way, like there are some places that say, well, you know, count the number of rooms in your house, and you know, if you have 5 rooms in your house and you use 1 room for your business, 20% is deductible. I don't recommend that. It's a terrible idea, especially with open concept housing now. Just measure the square feet you use for your office.
Can you not also use, okay, so we have a triple attached garage, which all the tools are in there. We do sanding in there. We do staining in there and stuff. You can use part of that garage as a write-off as well, right?
Yes. The math becomes a little more complicated because if you include it in your total square footage, right? You with me so far?
Yeah.
Include it in the total square footage, and then use the portion of your garage that's used for the business is included in your business square footage. But yes,
Right.
That's definitely, you should. I mean, if you have a triple attached garage and 2/3 of it is for business use, I would include it in the total square footage of the house.
Okay.
And then you use those 2 sections, measure them. You're like, oh, it turns out instead of 10%, it's 15%, and then it's 15% across the board.
Right.
Right?
Yep.
Now, that being said, if you had, say, a detached garage that was separate from your house that you built specifically for the business, that becomes a capital cost item.
Right.
And is depreciated, and then all the expenses associated with that. If you could separate them out. I mean, most people aren't going to get separate power meters for a garage. I mean, unless you're doing some big manufacturing, cabinets, that kind of stuff, where you would have separate power meters in order to keep track of the expenses that way. But no, that definitely would be, you should be writing that off.
I have a question in regards to the way we do it. We have a big shop that keeps all of our equipment, plus we have the home office. So our square footage used for business use on our property is over half of what our total square footage would be. Do you still calculate it that way, or is there a certain pop-up of what you can, for percentages of your power and energy and things like that?
I mean, you could make for that instance, you should almost have a separate meter. You can estimate the amount of power that's used, because odds are in the wintertime, you're going to use a lot more power in the shop, having repairing equipment, having stuff plugged in. I don't know if you have electric or gas heat. Yeah,
well, running welders and things like that out there, it's huge on the power and energy.
Exactly. So yeah, you're going to want to, you can look at it a little more closely and say, well, it is over half. So technically that is correct.
So would you do the same percentage on all of your utilities? So like all of your energy and gas and even your insurance policies, would you use the same percentage all the way through then?
You should use the same percentage. I mean, if you don't have water out in the shop though for the business, that's where it becomes a little more complicated, because like, well, I can't really write off a cost if it's not associated directly with the business.
Right.
honestly, I would recommend a separate power meter entirely. But again, that's another business expense that you'd have to incur, right? Because SAS Power won't put them in for free.
No, they're very expensive to put in.
Yes, they are. So yeah, you like the general thing with stuff like this is be like, well, you know, I built this giant shop that all my stuff is in, and now based on square footage, 90% of my costs are associated with the shop. Well, CRA is not going to believe that. It's a reasonability test. Is it a reasonable business expense? And you feel like, yeah, 65% of my power bill does go to run the shop and run the welders. Then yeah, definitely. Okay. That's a legitimate, reasonable expense. And you can, the thing I tell all my clients is, you know, yeah, you can claim whatever you want. Like realistically, you can claim whatever you want as a business expense. It's being able to back it up, right? CRA comes to me and says, well, Trevor, seems here that you're writing off, you know, 50% of your mileage. Be like, yeah, here's my travel log. Here's all the places I went. Or, you know, oh, you're writing off 10% of your office. How big is your office? Well, my office is 100 square feet and my house is 1,000, you know, 10%. But yeah, it's a reasonable deduction. And Shannon, for your instance, yeah, I think it's a reasonable deduction. And your other option is, as far as insurance goes, you can see if you need a separate policy on the business.
Yeah, we do. Yeah, because we're incorporated, so we have a commercial policy on everything that way. So. Yeah,
so incorporated, that's where it gets into a little different, right? So who owns the shop? Do you own the shop personally or does the company?
No, we do personally.
Okay, then for that instance, the company should rent the shop from you.
Right. But then we'd have to have...
Then you'd have to have what? Sorry, you cut out.
I thought I had discussed that at some point, and then we'd have to have a different type of income thing set up with our business, right? Because if you're renting or personally, then we'd have to claim it.
Personally, you'd claim it, but what you do is you set your rent to be what your costs would be. So say you figure out that the cost of the shop after your deductions is $700 a month. You set your rent at $700 a month, right? You take your rental payment and you list your $8,400 a year, and then here are all the expenses associated with that, and the net result is zero. Right? But that again is a very situational question based entirely on your business and your expenses.
Is that all corporations that you would recommend renting rather than, so if I'm incorporated, a limited a corporation, so rather than, so for a home office, since the company is basically its own entity, I would have to rent to them. I can't just take the 10% or whatever the home office is off of my expense because the company is basically another individual. Is my...
Yes, that would be my recommendation, because the company is its own individual, right? It has its own tax return separate from yours. So who's covering the office expenses right now? You are personally, right?
Right.
Yeah, then I would recommend that the company rents an office from you. And I mean, do it legitimately. Get a rental agreement and have someone from the corporation sign and you sign, right? It's paid this much. It's paid on this date. That's what I would recommend.
And then you have to add that to your own personal income tax at the end of the year.
That becomes part of your personal income tax, yeah.
But then you just turn around and put write-offs to that?
Yeah, so basically you figure out what your costs of your office are. So say the costs of your office are, $4,000 a year or $3,000 a year, whatever your costs work out to based on that square footage amount we talked about. And that's what your rental amount is. That allows you to take money out of your corporation, pay it to you personally, and pay next to no income tax on it, or no income tax actually, because it's written off.
Zero.
Right? because all you're doing is covering the costs. I mean, don't get crazy and greedy and inflate your costs artificially so you can milk money out of your corporation. Like, you're going to get caught, guaranteed.
Absolutely.
But it's a legitimate expense, and that's how I do it with my clients that are incorporated. They be like, oh, you know, this is if they don't have an office here, like, I can't claim a home office deduction anymore because I bought an office building, right? But I mean, if they're a contractor, they're incorporated, be like, okay, this is my home office. All right, then you rent it from the company, or the company rents it from you, and you claim it on your personal income tax just like you're supposed to, right? Like you would rent it to anyone else, right?
Yep.
Yeah, that's definitely what I recommend. And definitely have a written rental agreement that everybody signs and agrees to. I mean, it seems kind of silly because, you know, if you're a single guy, yeah,
your own name on your own name. I rent this to myself.
I'm renting this to myself, and here I am signing as a person, and here I am signing for the corporation, especially if you're incorporated in your own name. It seems ridiculous. I get it, but just humor me, fill out the form, tuck it away in the company files. That way if CRA asks, hey, can I see you're renting an office? Can I see your rental agreement? Sure, there you go. Have at her, right?
Sure.
Now, does anyone else have any questions about home office expenses? No? It's all very, very crystal clear. Did anyone fall asleep? We still got everybody? Yeah, I know. It's like some of this stuff it's dry. It's dull. I mean, I like it because I love saving money. I like keeping every last dime I can, but it can get now for the home office deduction. I have one client. They say, well, I work from my kitchen table. What percentage do I claim? And that is like, you have to figure out roughly how many hours a week you use that space, technically. I mean, you get it close enough. Say, you know, I work 5 hours a day on my business, 25 hours a week, versus how many hours in the day, multiply it out against the square footage, and that's usually the percentage you get to claim is pretty small. I mean, ideally, you have a dedicated space. Use a spare bedroom, convert it to an office, and that's your home office, and that's all it's used for. Right? So that's how you solve the kitchen table problem. Does anyone have any more questions regarding home offices or corporations renting offices from people? Nope. Okay. On to the next one. Vehicles. This is the one that always gets, CRA always checks this one because people try and claim way more than they're supposed to. So then this pertains to sole proprietors, right? The people that have company trucks because they're incorporated, or company vehicles. That is another whole set of calculations because you have to determine the personal availability and all that jazz. But for your basic sole proprietorship, here's what you need to know regarding vehicle expenses. Get a book, day planner, leave it in the car. When you get in the car to go somewhere for business expense, flip to that date, write it down. Write your start K and your end K. Where you went and why. Like, oh, I went to pick up, say Dawn went to pick up some stuff for her yoga classes. You know, I needed a new yoga mat, or I needed a new webcam because I'm doing online yoga classes, right? Totally legitimate. Write down your start K and your end K. And then January 1st and December 31st, just write down the kilometers. I mean, if you forget, like, oh, I didn't write down my kilometers, but you know you got an oil change in January, check your receipt. Your kilometers will be on there. That'll get you close. Fuel, insurance, maintenance, repairs, interest costs, or leasing costs. Leasing costs are more deductible, mostly because you're not claiming the capital cost allowance. So purchase price is considered a capital cost. So you go out and finance a new vehicle, you spend $20,000, because if you're over 30, the capital cost rules are a little different. If you're over $30,000, they won't let you, they consider it a luxury vehicle. Although if you're buying anything more than or less than 5 years old, you're going to spend more than 30 grand. But the purchase price is a capital cost. And again, that's based on the percentage of use, right? So if you only use the vehicle 25% for work, for your business, then 25% of the capital cost is deductible on a depreciation scale.
Is that why you take into account the start and end of the business trip as well as the personal kilometers driven, so you can find out the percentage that was used for work versus personal?
Yes.
Okay.
And then, I mean, you just, what I recommend, some people, it really depends on your personality. When we talk about record keeping, I'll get more into this, but there are a lot of apps that you use to start and end kilometers. Even if I have a client who's a superintendent with a construction company, and they get an allowance for drives his personal truck for work, gets an allowance, right? Oh, this is great. It's like getting free money. Well, no, not exactly. You got to keep track of all your expenses and your total work kilometers versus your personal kilometers, because all of that is taxable. Now, corporate owned vehicles are different entirely. If you have dedicated corporate vehicles, they're owned by the corporation looks after them. You don't have to keep track of kilometers for those. There are some sections where if you own, and this is especially with the construction companies, if you have a half ton, if you use it only for business, then you don't have to pay a personal income tax on it. But if you are using the company truck for personal use, there are implications on your personal income tax for that. And
Hey, Trevor, okay, so
Yep.
we have 2 trucks.
Yep.
One is used for nothing but the company.
Gotcha.
The other one is personal and company.
So who owns the personal and company one? Is it owned by you guys or owned by the company?
We personally own both.
Oh, are you incorporated or are you sole proprietor?
Sole proprietor.
Okay, well, in that case, that would be, you just have to keep track of the kilometers. And I mean, if the truck that's 100% business owned is 100% a business deduction.
Okay.
Right? You just need to keep, and this is, I'm going to stress this part, just keep accurate records. Because I've had farm clients get audited where the CRA comes and says, okay, that farm pickup truck you bought, is what percentage is that as personal? And they said, well, it's 100% farm use because it's a regular cab flat deck with a fifth wheel hitch mounted in it, and it's useless for anything else but farming. But you need to keep accurate records, especially if you have one that this is 100% business use for this truck, but this truck we use personally. So just keep a record. If you're not tech savvy, like for all the technology in the world, I still rely heavily on paper. And I just have a book. When I was a sole proprietor, I just write down my start K and my end K. I know it seems like a pain, and it is for the most part. It's like just one more step you got to do, but you really need to keep accurate records, because that is something where, especially if your business use is high, like say it's 70% business use and only 30% personal, they're going to ask. And you can say, no, here's my records. Here's every day, where we went, what we did, and you'll be fine, right? Everyone worries about getting audited, but really you basically got to look at it as like CRAs coming to look at your stuff to make sure that you claimed all your deductions. It's an opportunity to find more deductions that maybe you missed.
Yeah.
Right? Once you're done sweating, once you get over the initial like sweaty chest pain, oh my God, the government's coming for me. No, they're not. Those are just the guys on the phone that tells you the feds are going to come and kick in the door and haul you off to jail.
Hey, I have a question, and this might be totally up. The people who do, so I keep track of everything, and then come at the end of the year and I go to the accountant to have the income tax done. I have everything all written out.
Mm-hmm.
Last year, they wanted me to buy some kind of insurance thing.
Errors and emissions?
Pardon me?
Errors and emissions insurance?
No, it was in case I got audited. In case Revenue Canada called an audit, that they would take care of it instead of me. So, okay, for example, I have a lot of medical expenses every year.
Yep.
And 1 year, and I keep track of all that. I just take it in. Here's my medical expenses. They calculate it.
Yep.
And then 1 year, Revenue Canada wanted to see it. So, well, I had everything all stapled together, and it's at the accountant. So the accountant just sent it in, and that was it.
Yep.
Well, now, and of course, I didn't get charged for it. I mean, I had everything together. Now they wanted me to buy this insurance. It was $350 a year or something like that. So if this happens, pardon me?
Okay, no, continue. Sorry, I'm just
so in case this happened,
this.
Instead of billing me for it in the future, then this insurance I bought would cover it. Well, I didn't take it because it sounds kind of silly because I had all the medical. I could just go to them and say, give me my medical expenses and I can mail it to Revenue Canada.
That is 100% correct. You can just mail it to Revenue Canada because at the end of the day, you're responsible, right?
Right.
It's like medicals get audited often. I have some clients that they're very generous with charities. Every year they come and ask. They want to see the receipts. And are you asking me if I think that audit insurance is a?
Well, yeah,
legit?
like I thought. Well, I've never heard of this, but they said they just brought it in last year, and yeah. And I thought, well.
Sounds like a cash grab to me.
I would agree.
I mean,
if you had a really complicated business, maybe that might be something, and you knew you were going to get audited annually, then your accountant just takes care of everything. But I mean, I've been audited as well, and I did bring the accountant in, but that's just like your accountant should be looking at you as how much they're going to make off you in your lifetime, not in one audit.
Yeah,
I mean,
ours is just so simple. Like everything you've gone through, that's exactly how it is on our income tax thing. And I figure everything out here, but I don't know how to do the capital cost allowance.
Okay.
And so that's why I take it in.
Yeah, I mean, to charge you $350 for audit insurance now this is my personal opinion. I feel it's a cash grab. Like I have clients that get audited. And we have a standard agreement. Yeah, you get audited. If you want us to take care of it for you, it's just an hourly rate. Now, that being said, if they get audited because they gave me false information, I will totally correct it for them. But, and there's a but, it's not something I would do for free. But no, I wouldn't buy audit insurance, especially at $350 a year.
Yeah.
Yeah, no. And
I have heard of something similar from H&R Block, where their policy used to be that they would take care of it, and then they brought this in because they must have had to pay a few times when they did. If it's their mistake, they pay, and there was. So I know there have been changes in the H&R Block system because it was the same kind of thing where they offer this extra insurance, and I'm like, no.
No, I mean, an audit should be very straightforward. And I agree, unless you have a really complicated corporate return where you have, subsidiaries and this corporation owns that corporation and you're paying intercorporate dividends and it's just like a rabbit hole trying to follow, let's play where the money went. No, buying audit insurance is not something I would recommend or ever do.
Okay.
It shouldn't be. I guess my question is, what would you need audit insurance for? All your stuff is there. It is all clearly itemized.
Yeah.
And you'll get audited for medical, like if anyone gets laser eye treatment, that's a medical
okay.
expense. And I mean, it's expensive. It's like $6,000, and all of a sudden you're claiming a $6,000 medical expense. Yeah, you're going to get flagged for an audit. And really, it's easy. You fax them the receipt. There you go, done. You save yourself $350.
Somebody told me, and I don't know if this is right. So, okay, so say this year you have $1,000 in medical expenses and it doesn't make a difference. You can accumulate 3 years worth of medical expenses and claim it on the third year? Yes, no?
Not to my knowledge, no.
Okay.
Not that I've, now that being said, maybe something has changed.
Yeah, I know
has
that
been
was a couple of
changing
years
their-
ago they told me
Yeah,
that.
not as far as I know. I mean, you can have medical expenses if you claim in 1 year, if it's something significant, and you can claim it forward a couple of years, because there are thresholds and limits to medical expenses based on your income. I mean, I think you have to hit 3%.
Yeah.
If I remember correctly off the top of my head. Jeff.
Is there a
Okay.
place to find out what kind of medical expenses would be covered? Or
I would,
deductible?
yes. Yes, so I would direct you towards the CRA website as far as medical deductions. Just Google CRA medical deductions, because like that's something we could get into. Like there's medical mileage if you live further than 80 kilometers away from an appropriate facility. Yeah, that can.
Okay,
can add
like
up.
oh, good. I'll check it out.
Even
you
your
have-
even
just
any of your premiums, like you play into Blue Cross or anything, that's all that's a medical expense.
Yes, it is. If you pay for private insurance. Now, the portion that you pay, like if you have an employer-sponsored healthcare plan, the portion that you pay is not deductible. They won't let you write it off.
Yeah.
All right. But
So just so that you know, for those of you that weren't at our session last week, the CRA, and I mean, I give them a rough time just because their website is brutal, but they do have a liaison program. Or so if you're unsure, they would actually meet with you one-on-one and take a look at how you're actually preparing your tax return, and then make suggestions on changes because it's going to trigger one thing or another. And their liaison program is at arm's length, so they can't go back and share any information with the tax people. And so it is a service that's free.
Good to know.
And you know what, Trevor, we've run out of time for today.
what? Oh my goodness.
But that's okay, because I think we're just going to have you come back. And like, obviously you're doing the GST, PST one, but we're going to need you to come back. And because
How far did you get in your presentation?
Oh, I made it to 11 of 16. So 2/3 of the way.
that's pretty good. But you know what?
Man.
This is a heavy subject.
It is, but it's also been really interactive and it's been really good.
Yes.
And I know, like, I've gotten a lot out of it. I'm sure everybody else has. So I think it's worthwhile. Maybe we, realize now that we need to do more sessions with you.
Yeah, I mean, I didn't even get to the contractor versus employee. That was kind of my big thing.
But if you just make a note of where you actually stopped.
Yeah.
Yeah, I'm at
Yep.
11.
Yeah.
And so then we'll re-examine our schedule
Joel? Yeah, exactly.
and then get
Hey.
you in to come in, because this other part, like contractor versus employee, some of these other points that you were going to bring up, I mean, they're going to trigger discussion.
Mm-hmm.
Yeah, and I mean that's what I hope for. I mean, when I planned this webinar out, I wasn't sure. I was like, well, I'll throw some slides together. I mean, I'm sure I'll get to the end and we'll have like 20 minutes for discussion.
No.
Did not.
No, I knew
did
when
not
you hit
happen.
that home office one that is always a big one in any sessions that we do. And lots of people have lots of questions because lots of us use a portion of our home to run our business. So it's very
I
important.
totally agree. And especially, I didn't realize we have so many corporations, because that's a whole nother animal that's just.
Does
a
anybody
lot of
have any
fun.
questions on what we covered today before we do end? Or we covered it? It was pretty good how everybody was asking questions as we were going. So
Yeah.
And I mean, you guys can get my contact information from Jessica. If you have any questions, just fire me an email. I work a lot of weird hours. So if you get an email back from me in the middle of the night, don't worry. Just, I got little kids. I'm up and down. And nothing puts them to sleep faster than looking at capital cost allowance tables. Man, they glance at those and they are out.
Now, Trevor, one thing, would you mind emailing me your presentation, and then I can at least send it to the group here that's
Yeah, that would be
Certainly.
nice.
Yep.
That would be great. And then we can send that out. And then obviously Trevor's back in 2 weeks and he's going to be focusing on GST and PST. So then maybe after that, if there's still some questions that we didn't answer today, you can ask them then as well, even if it's pertaining to anything we covered today as well.
Yeah, and I mean, if we're going to come back for a third session, we can go over whatever didn't get covered today. And then as well, if you guys have any questions, if you want me to touch on something specifically, I can definitely adjust it as I need to.
Yeah, and I
Awesome.
think that just that home office component could be a session, you know,
Yeah. Well,
realistically breaking that down even further, and just those specific expenses related to your business. So
yeah.
I think that's great.
It would be wonderful if we could have copies of the most recent tables for the CCA and even possibly medical expenses. I'm trying to Google them. I'm not having much luck. I'm getting all kinds of things. And we know the
Yeah, you know what? I
website.
will send my presentation to Jessica along with CCA classes where you can find them and where the tables are, as well as
Oh,
the
perfect.
medical expenses. And the medical mileage can be tricky, but I'll definitely send all of that to you along with my contact information. If anything's not clear, just fire me an email. It's not a problem.
Perfect.
It's no.
That would be awesome.
Yep. Well, very nice to meet all.